welcome in Cinthia Murphy is with us, investment strategist, TMX Vetify. Thank you for being here.
Hey, Nicole.
So some of your big picture thoughts. I mean, 2 days in a row of gains, people like that generally.
Yeah, I think we're kind of feeling relief this week, but it's only Wednesday and it's been, trade talks with Japan don't look so great, we go down sharply. Now trade talks with China look better, we go up sharply. It feels like every day is a new surprise. So I feel like it's a little too early to celebrate, but we'll take the win today.
Right, understood. And that means that you're becoming a little more accustomed to volatility and turbulence in the markets, right? I mean, how do you prepare for that? What do you tell folks when they call you and ask questions about that?
Yeah, we're seeing a lot of investors try to brace for the volatility and to manage that exposure to U.S. equities. What's been interesting to see in the ETF world is that investors continue to buy U.S. equities, continue to buy S&P 500 funds and NASDAQ funds, trying to stay exposed to equities, but managing that downside risk, whether that's through diversification, whether that's through kind of defined outcome strategies. There's definitely an appetite for minimizing that downside risk, but nobody's really ready to stop investing on U.S. markets yet.
So, look, we had the tariffs, then they were suspended to be worked on, and it seems that they are being worked on to a certain extent. How do you feel about what's going on here and whether or not we can come out on top?
Yeah, it's been interesting because it's amazing how trade has become the story of the year. We just ran a survey this week at Vetify and asked, advisors and investors, what are you most concerned about this year? What's your really positioning for now? And 50% of them said tariffs, number one. Nothing comes close. So the whole trade has been a big discussion. And, folks have found ways to navigate that. There's been some interesting products come to market that really look at investing in the companies that try to generate most of the revenue in the U.S. Global X has a couple funds that do that. So try to find ways to stay exposed but minimize your own exposure to the trade risk, to tariffs, and which ultimately may lead to inflation.
Understood. So at this point now, you have so many ETFs, you're talking about fund flows. What have we been seeing?
We're seeing appetite for equities. We're also seeing appetite for defensive positions. So, you talked about this week about gold, a lot of demand for gold, your classic safe haven, a lot of demand for ultra short bond funds, your T-bills, 0 to 3 month, which is basically a cash-like position. So your defensive positioning, keeping that money as close to cash as you can, picking up some yield there. And you've seen some opportunity in kind of that defined outcome space, get some upside capture, but a lot of downside protection.
Do you think these trends will continue, or are they likely to change soon? It's hard to say, right?
It's hard to say because every day is a new news that changes markets. I think markets are very nervous right now, so anything feels like a big catalyst. I think the earnings season will be important, not as much for, I think, the Q1 results, but the forward guidance. We all want to know how these companies are going to be pricing this in and building this outlook into their forecasts, and there's really no clarity there, so I think uncertainty will remain high and volatility should remain high as well.
You talked about demand for ETFs, for equities, and that was looking good. I know people have been looking at Bitcoin ETFs. What are they looking at? What kind of ETFs seem to have demand now?
So on the Bitcoin space, it's been like a tough year, but just this week, you've seen money start going back to your spot Bitcoin exposure. There's been a lot of concern, as you know, about the dollar weakening. So these kinds of alternative plays to the dollar have been gaining momentum, Bitcoin being one of them, gold being another. So outside of equities, some of those assets have been resonating.
And are they looking to other things like tech or healthcare or double leverage on the VIX?
Yeah, it's been interesting. The leverage space has been surprisingly hot considering how risky things are.
Right.
So it's almost like, a lot of folks are being very tactical and they're going to 2x, 3x any kind of upside opportunity here. But then they hedge that with your gold, your Bitcoin, your treasury, your T-bills. So it's kind of an all or nothing feel you get from some of these plays we're seeing. So it's kind of an interesting market right now.
Sort of like a barbell approach, like one with high risk and one with maybe a little more of a safe haven. Going forward here, do you expect that we could trend higher between now and the end of the year? I mean, is that something people talk about, or is it more just managing the risk?
No, I think so. I mean, that's the hope anyway. I mean, most economists right now are coming out, and there's a lot of questions about, are we, U.S. exceptionalism, are we still exceptional or not? But the truth is, everybody thinks the U.S. is resilient. The economy is strong. So we may have turbulent markets here, but economic growth hopefully will continue to go up, and that should be supportive for stocks. But we'll see. I mean, it's been a box of surprises in 2025.
And look, earnings have been relatively good, but it's hard to get a clear glimpse into guidance for the most part. You're also, as I mentioned, what kinds of ETFs may be interesting to folks, or they like, or whatever. And you have some that you have the ETF NRSH, the as Latin North American, American Reshoring, U.S. Manufacturing ETF. You have 3 ETFs here. Did you want to tell us about that?
Yeah, well, that's an interesting thematic play right now. Again, if you're really concerned about tariffs and trade, these ETFs are investing in that nearshoring, the reshoring, the bring back manufacturing industrials to America type of theme. So they invest in the stocks, the companies that are industrials, transportation, logistics, the businesses that are going to be, driving that, bringing back manufacturing here. So it's another play for domestic exposure that should be minimal exposure to tariffs, if that's your main concern right now.
Right, and those ticker symbols are MADE, M-A-D-E-R-S-H-O. That's the reshoring one, and I mentioned the one earlier, the North American Stock Selection, NRSH. Those are the 3 there. I mean, when you're looking at earnings season so far, is there anything that stands out to you or tells you the story about the picture, whether it's labor, the economy, the outlook?
I think it's been relatively good, relatively positive. I mean, if things continue now, FactSet has a great note out saying it should be our 7th consecutive month of earnings growth for the S&P 500. If we stay on pace that we are right now, it's early days. But I think it's going to be interesting to see that forward guidance, which we haven't really seen anything really clear on that front. And I think it's going to be one of those environments where we have very little tolerance for disappointment. Yeah. So any downside surprises probably would get punished here. And any beats will be maybe mildly celebrated because we're really concerned with the downside.
And just quickly, Global X launched 2 revenue-focused ETFs that you said were very timely. The Revenue Leaders ETF and the Market Leaders of the U.S. Top 50 ETF. Are you thinking that those are seeing some inflows in demand right now?
Those just launched. They're brand new last week, but they're the perfect ETF for the time because they look at S&P 500 stocks and they only invest in the ones that generate most of the revenues in the U.S. So about 40% of S&P 500 revenues are actually generated in international markets. And so these funds kind of screen for that to really focus on U.S. exposure. So it's kind of really about focusing on the U.S., bringing business to the U.S., all because of the trade talk.
Right, one's the Market Leaders, that's actually FLAG as the ticker symbol on that one. The other one's the Revenue Leaders in the U.S., and that's almost like Eagle, E-G-L-E, E-G-L-E is the ticker symbol there.
Great
Cinthia,
tickers.
it's great to see you. Cinthia Murphy, thank you so much.
Thank you for having me.
Of VettaFi, TMX strategist at VettaFi, thank you.